Hi, good morning everyone. My name is Ram Dhamija. Welcome to my channel. So finally the Nifty all-time highs are here and it's a happy situation to be in. The markets are rejoicing. The GDP numbers have come out very well. At least the real GDP numbers are looking good. There is optimism all around and a lot of new sectors are making new all-time highs. The portfolios are doing okay. At least some of the portfolios are okay. A lot of portfolios are not doing okay, which I will discuss. But some of the portfolios are okay if you have invested sensibly and if you have constructed your portfolio thoughtfully. Then your portfolios will also be smiling along with the markets. So it is a good scenario. Finally, we have crossed the all-time high after 14 months of wait. Last was all-time highs were seen in September 2024, and after that it has been a very slow grind. In fact, the cracks started to show somewhere in December when the broader markets actually cracked. So that is when small cap, mid cap, etc. cracked big time, and the capitulation actually happened in February, and we tried to then move up in March. That is when the FII selling had stopped in March to 2025. But then came April, the Liberation Day in US, and that was the final bottom. So I had been maintaining all along that the capitulation that happens, the final bottom that is made is usually happens on capitulation. So even when the Liberation Day happened, I had tweeted and said that this possibly could be the bottom that the markets have made, simply because the day when markets actually crack 3%, 5%, and you see all momentum, small cap, etc., down 7, 8, 9%. There are sometimes they're on circuit and so on. That is the time when the final bottoms are usually made. So bottoms are usually very violent. So if you see, even in 2020 when the bottom was made, it was made on a circuit day. I think it was 23rd March, if I'm not wrong. It was the market was circuit down and then it recovered. So same happened on Liberation Day, which was April 7th. So all the market bottoms are usually made on very violent days. Same is the thing with the market tops as well. So market tops are not so pronounced, but market tops also will be made. So let's say if there is a good RBI policy or something like that, event day when markets really cheer up, and then they realize, oh, okay, that that was that is the final top that was made. So tops are usually made on peak euphoria and bottoms are made on peak pessimism. That is one hallmark of tops and bottoms that is there. But anyways, now finally we have crossed the all-time high, and we are kind of nibbling around the all-time high levels now, and it's a big relief that whoever has been invested, and which I've been maintaining all along, that this is a good time to invest. Please do invest. I've been saying that for the last almost since beginning of the year, since March, April. I've been maintaining that any dip that has come is a buying opportunity. So there have been many dips that came. There was a India-Pakistan war that came. There was Iran-Israel war that came. There was Israel-Palestine thing that came. So there was a price rise in terms of crude and so on and so forth. There have been so many geopolitical events that have come and gone. There have been, so each of these is an opportunity to buy. And whenever you see that there is a dip in the market, if you deploy some money, then usually that compounds over a period of time. So let's say if you're doing a simple SIP and you get a X return, if you invest SIP plus lump sum, then that returns actually get added to 1 or 2% more over the long term. So that is one thing that one should take advantage of whenever the market is falling down, and that your market, your sector, your stock is not going to get affected by that particular news. Let's say if something happens in US or something is happening in Middle East, our country doesn't really get affected immediately, or in the short term, or some companies don't get affected at all. But when the markets go down, then everything goes down along with them. So that is a good time to invest. So that was one thing that I wanted to share. So whoever has been patiently investing has got rewarded very well. And as I've been maintaining, this was a golden time. This still is a good time. I'll tell you why this is still a good time to invest is because the market has been flat for last 14 months. The world markets have gone up. The US market has gone up. Chinese market has gone up. Japanese market has gone up. Korean market, Taiwan market, all the markets have gone up. They've been making all-time highs. Vietnam market. So only our market has not gone up. So relative to the other markets, our valuations have also become reasonable. They're still higher than the other markets because traditionally that has been the case. So let's say for China trades at 9 or 10 times multiple, we still trade at 22 times. But earlier we were possibly 24 and China was 7 times multiple. So those kind of anomalies are getting resolved. Or let's say emerging markets, if they trade at 12 multiple, we were trading at 24. Now if they are at 14, we are at 20. So relatively we have become cheaper. So again, it is a good time to invest. If you think that you know investing, or you follow a system of investing, then it's a good time to invest. And if anyone needs any help in terms of investing, I offer my services also free of cost. I'm a mutual fund distributor, AMFI registered, NISM certified, and I help people build very strong, robust mutual fund portfolios. And also, if you want a free valuation of your mutual fund portfolio, then also I offer consultation. So you can just need to fill the Google form in the description below, leave your contact details. I will contact you, and then we will have a discussion, and I will evaluate your portfolio free of cost for you. And then we will see if you need some help in construction of the portfolio also. I will do that for you. Again, it's all free of cost. So let us begin today's video. There's lots to discuss, and how is the market outlook looking for the next week and possibly the next month. So we'll discuss all that. And there has been a very big development also that has happened overnight. So silver has again crossed all-time high. I'm going to make a proper video for it tomorrow, so watch out for that one. Last video that I made on gold, the prices of gold, can it double from here, that received very, very good reviews, and a lot of people liked it, loved it. And I'm going to make a video on silver tomorrow, how I see it, and why you should be invested, and how much you should be invested, and where do I see silver going, what is the silver squeeze all about, and so on and so forth. So watch out for that. And also, if anyone wants to join my WhatsApp group, they can again fill the Google form. I will add you to my WhatsApp group. Again, it's free of cost. So let us begin today's video. This is the Nifty chart, as you can see on a 1-minute chart. And Nifty over here has basically this blue line that you see is the last all-time high that we had made in September. So market tried 2 times to break it. On a closing basis, it was not able to, but on an intraday basis, it was able to cross this level, and we went to 26,300. So as I had been maintaining, we might consolidate over here, we might go up. It'll be actually be better if we consolidate within this range of 26,500 to somewhere around 26,000, because once the consolidation actually happens and continues for a long period of time, then the next up move that will come will be very, very robust. So that is why I say periods of consolidation are good. So for example, if you see over here, just turn back the clock some months, you can see the consolidation that happened over here from June, July till about close to October. So we were in a range which was capped at 25,000 on the upside, and somewhere around 24,000 on the downside. So we spent considerable amount of time over here, and then once we broke it out, then we really took out 26,000. So again, I am saying that we can consolidate between 26,500 to 26,000. That will be a good consolidation before we take out the next high at 27,000. So whenever markets are actually consolidating in a range, they are building a strong base, and which is very much required for a sustained up move. And when the distribution phase happens, then exactly the opposite of this happens. So market, then they will try to break a level, then they will fail, then they will go down, they will break the previous lows, and so that is the distribution pattern. The accumulation pattern is when the markets they go in a range, but then they make higher highs and higher lows. So that is exactly what is happening, and I would treat it as a really good opportunity to accumulate, because if you're investing for the long term. So a lot of people, what happens is that sometimes they get dejected. Oh, the market is not moving, I am putting money. Please understand that treat it in this way, that let's say if you're buying mutual fund, you're buying more units at that particular price, because whenever the market moves, it will not let you get in. Suddenly you will see 2, 3, 4% moves in a week, and you will feel left out. Oh, then the anchoring bias comes in. No, I was thinking of buying at 26,000, now market is at 27,000, let me wait till it gets to 26,000, and the market will go to 28,000, and then you will be like, oh, I missed this rally. So the whole point is that whenever consolidation is happening, correction is happening, I've mentioned before, that is a good time to accumulate. Now let us look at the other things. So this is the Nifty 200 DMA, 20 DMA, 50 DMA. I maintained that 20 DMA over 50 DMA over 200 DMA is the best case scenario for a bull market. But over here, 3 days back, we finally touched the 20 DMA, and from there we sharply bounced up. So there is the pattern is beautiful, and right now there is no threat of market going down as I see it right now. And this, if this pattern continues, then we are looking at a much higher level. So 20 DMA just for academic purposes at 25,886. Till the time we are above that, we are very, very bullish. Okay, now let us look at the open interest. The open interest right now is at 1.12. So that's a healthy sign. So if you see, there are 16 crore calls versus 18 crore puts. So puts are more in the system. So of course the put writers are going to defend 26,200. They will try to defend 26,200. Even if I look at in the closed 10 strikes, it is evenly matched right now. So 26,000 is a good support at about 1.7 crore calls, and then the big one is 26,500 and 26,300 also. The call writers will try to defend it, but this is what the data is. So the data is again positive in open interest. In terms of the premium on the straddle right now, there was a lot of good decay that came in on Thursday and Friday. So last 2 days of the month have closed very well for the option writers. I had been maintaining that October was a very, very rough month. October typically is a very rough month. So after a tough October, we have been able to finally close well, which is good. And there was good realization in the last 2 days. So November has turned out to be a good month for option sellers, and yours sincerely also was able to do well this month. So hopefully the year should now start looking good if December also looks good, because it has been a very tough time for option sellers. Let me be very honest with you. Last year was very, very good for option selling, and the years before that, of course, they have been very, very good, but this particular year, because of so many changes that have happened. First the expiries got changed, then the expiries got banned, then the lot sizes got changed, then the days got changed, then so many changes that keep on happening, and then the margins were changed, and then the because of that, there has been a lot of volatility, and the realization, the VRP has not been good. So that is where the option sellers have at least the ones that I know have not, at least their returns have come down. So even in my case, the returns have come down a lot this year compared to last year. But as professional option sellers, we know that how to make money from the markets, because our risk mitigation systems kick in. So even if, let's say, we are losing, we change our position sizing accordingly so that the loss doesn't amplify. And but this year I have taken a conscious call, especially after October, to de-risk, because I need to close the year at a decent, at least in double digits in terms of the returns, because last year was very, very good in terms of option premium returns, wherein I had closed in I think close to 30% returns last year. But this year the returns are in single digits. So at least I have reduced, I've de-risked my systems, and now I'm working on a system wherein at least I try to ensure that, let's see, we at least in double digits closure should be there. Because what is more important is that if you are in this particular options selling business, then it is very, very important to ensure that you remain profitable every year. Because if you're treating it as a business, then you have to ensure that you remain profitable. If you're treating it as gambling or whatever, you should not enter. If you are treating it with proper systems, proper stop losses, and proper return expectations, then you have to ensure that even if you get lesser returns, but you adjust your systems. This year I would have adjusted my system so many times. So I have stopped now mostly discretionary trading. It is mostly system trading now. But even my systems, I have adjusted it so many times this particular year. So if you are doing systems trading, then you also have to keep on testing your system to see whether they are robust enough or not. And when you see that your systems are not performing well, like in October was a big loss month, then you readjust your systems. And in fact, the entire loss of October also got covered in November, and some addition came in. So that is a big relief that the system is working, and de-risking actually helped. Now let us move ahead. This is the FI data. So as you can see, FIs have reduced their shorts a lot, but that has also got something to do with the monthly closing happening. And right now they are actually, in terms of absolute numbers, they have reduced their shorts by half, but in terms of percentage, they are still about 81% short, because they haven't really added too much long. So if you see this data, you can see over here that FIs are 1.47 lakh. Sorry, FIs are 26,000 contracts long, whereas 113 lakh contracts they are short. So they are still net short 81%, but this figure of FI short was about 2 lakh crores some days back. Now let us look at the performance of our markets in the last 1 week. So last 1 week, VIX has crashed by 15%, and this is not an isolated event. The VIX has actually crashed for US also, so our VIX has gone down. In terms of the sectors that have not performed so well, PSE, energy, etc. have not performed well, but the sectors that have really outperformed last 1 week have been pharma, banking, metals, IT. So all the heavyweights, financial services, all the heavyweights have come in. The one that is slightly a bit of a concern is small caps, which is down almost 4% for the month, but it was flat over here. And if you look at the monthly performance for which indices have actually performed well, so you will see IT has been leading at 4%, followed by autos, pharma, banking, and financial services. And the ones that have not done so well are metals, small cap, and public sector enterprise. These three sectors have really not done well, and that is a bit of a concern. Now another interesting thing that came out was the GDP data. So GDP print came out, and we have scored a good high, okay, in terms of the real GDP growth. So it's come in at about 8.2%, which is very good. And in that, manufacturing, as you can see, is at 9%. Financial services has really done very well at 15%, and consumption, etc. have also done well. But the only cause for worry is that nominal growth has come at about 8.7. So you can see over here, the nominal growth was maybe 12, 12 and a half, 10. It was in double digits. Now the nominal growth is at 8.7. So what is the significance of nominal growth is that your economy will actually, at least the profitability of the corporate sector will be tied up to the nominal growth in GDP. So let's say if the nominal growth of GDP is in double digits, then you can expect 1 or 2% higher than that as the corporate profit, because these are the best companies that you're investing in. So if your nominal GDP is 12%, then a couple of percentage points, 14% is your profit growth of your corporate, then the returns from the market will also be pegged at 13-14%. However, if your nominal GDP is 8.7 and corporate profits are couple of percentage points, 10%, let's say 10.5, then your market returns will also get capped at about 10 to 11%. So that is for the long term something to watch out for. 8.2 is a very good number for real GDP. The only thing is deflator is the deflator, which is tied to inflation, is now very low. So because of that, the nominal GDP has gone below 10, which is something that to keep an eye out on, because otherwise the returns from the markets might get impacted because of the nominal GDP going lower. The thing that caught the eye was this is now the international markets. Now we'll come to the international cues. Black Friday, consumers go online rather than stand in line. So that is one thing that is there, that consumers are now more and more going online for their shopping on Black Friday and so on, rather than doing physical store shopping. And that is one thing that is worldwide phenomena, that you will also see that even in India, the companies that are doing really well, the consumption companies, be it the in food delivery business and online shopping and so on, they are the ones who are gaining a lot of market share from the traditional stores, retails. So this is a trend that will continue going ahead. So I thought this was an interesting thing to share. Apart from that, two other things. One is that volatility in the international market has crashed. So volatility is 16.5, and otherwise I think the markets are doing absolutely fine. So I will just show you what is the international cues looking like. So S&P is absolutely fine. It actually closed up. Nasdaq closed up. Nasdaq is again now getting near to its all-time high. Dow Jones is absolutely fine. The S&P VIX crashed to 13, which is signaling think that the market will continue its upward journey. US 10 years and 30 years are well within range. Dollar index is below 100, which is again very good. USD INR is a problem for us at 89.3, but now the 89 is the new reality we have to live with. Brent is very well behaved at 62. That is excellent news for us. But the real story is happening in silver, which closed at about 6% higher. So I'm going to, as I said, going to make a video tomorrow on it. And gold again, it has closed 1.2. So gold is also nearing its all-time high of 4400, and silver has already smashed its all-time high of 54. It closed at 56. So what are these things basically telling you? That there is a debasement that is happening in the fiat currencies. There is de-dollarization that is happening. So, and mind you, this last $54 silver high was made in US dollars. So in INR, even if it came to 54, we would have already crossed, because INR depreciated from 88 to 89. Now silver is at 56, okay, and dollar is at 89. So already in INR terms, silver has way crossed its last high. So when you see that gold and silver, when they are going up, they are basically risk-off trades. They are indicating that the currencies are debasing, because there's a lot of money printing that is happening internationally. So one has to be very, very careful of that, and some amount of your portfolio should be in gold and silver, is what I've been maintaining for a long time. And if you don't have that, then please, you should consider, and please talk to your financial advisors, please talk to your mutual fund distributors, please take help. If you're not sure about that whether my portfolio is the best or my portfolio is performing really well, please take help. There is no harm in talking to people and trying to understand their viewpoint. And if you think that it is fine that I can take the services of a mutual fund distributor, then please go ahead and do that. Maybe with a small part of your portfolio you can do that. You don't need to put your full portfolio with a distributor, but at least try and understand, okay, because you are not a full-time market participant, you are investing. So when you go to a dentist or something, you don't say, I'm going to take out my tooth myself, or I'm going to do the root canal myself. So why do you think that you don't need help in investing? Just because you are seeing TV or seeing some YouTube videos, you think that you know all the things. So it is always best, because let's say even a mutual fund distributor, to become a mutual fund distributor, you have to pass an exam, okay, you have to be in the market, you have to perform, you have to deliver for your clients. Only then the clients will trust you. And you are attending so many seminars, you are doing so much of training. So the person who is doing this work in and out, day in and day out, understands these things well. Same goes for financial planners and so on and so forth. So it is always good to take some help. And people like me who are full-time market participants also understand the market well, hopefully. And that is where I try to help my clients also build a very strong portfolio. So if again anyone needs any help, they can fill up the Google form and I'll be happy to help. So that's it from me now. I hope you enjoyed the video. The markets are looking fine, everything is looking good. Let's see what the next week is in store. We have to keep an eye out on gold and silver and see how they perform, and then take calls accordingly. And international markets are also looking fine. So that's it from me now. I shall see you soon with another update. Till then, take care. Bye bye.